A bunch of stocks doing extremely well in today's trading session, but Venus Pipes and Tubes is the stock on our radar. The company has announced a capacity expansion plan to increase production of their seamless tubes and pipes. To tell us more about the prospects of the business going ahead, we do have with us Arun Kothari, who's the managing director of the company. Thanks a lot, Arun, for joining in. The first question is basically, what's the kind of capex that you've lined up, or what's the kind of expenditure that you will do to increase the capacity? And concomitantly, once the capacity increases, what is the revenue potential of these businesses?
Just I will brief about the right now company is operating at the level of the 1000 MT per month in the SS pipe segment. In SS pipe, we have the two segments. One is the welded pipe, another is the seamless pipe. So we had planned earlier before the IPO capacity increase from the 1000 ton to almost 2000 tons, or with the backward integration of the 800 tons. So indirectly, company was increasing the capacity from 1000 tons to 2800 tons. So further, after the IPO, company has decided further increase the capacity in the welded pipe segment, bigger dia in welded pipe segment. From the in welded pipe, there is a two process. One is the 312, another is the 358. So company is increasing the capacity in welded pipe segment in 312 segment up to 20 inch dia by the 700 tons. So in fact, total capacity of the finished goods capacity of the company will be 2,800 tons from the present capacity of the 1,000 tons.
Arun, we want to understand very simple details. What is the current debt in your books? That is your long-term debt and working capital debt put it together. And given that you're talking about your capacity going up by double and triple, what is the total capex that you're going to be incurring? And what does that mean in terms of a peak debt number? Very quickly.
Right now, company will be infuse the capex investment of the approximately 150 crore. Out of 150 crore, company is expecting that in the long-term debt only 40 crore. Otherwise, from the IPO, we are doing the expansion from the IPO proceed only around 110 crore almost. Or company will further by the improving the capacity, company will able to improve the capacity by end of the FY23 or first quarter of the FY24.
But you're not telling us what is the current debt in the books.
Current debt is the including the long term as well as the working capital, yes, both including almost 61 crore.
61 crore, and at peak, what does the debt go to? You're saying 40 crores out of this 150 crores will be debt. So from a total of 61 crore, what does it go to at peak?
Peak debt, including the working capital, we are looking approximately 125 crore at the maximum level.
All right. And what about, you said you're doing a fair amount of backward integration, etc. Where do margins trend from here? Because I'm looking at your margins over the last few quarters, they've trended between 11 to 12 odd %. So your entire capacity comes on stream by, say, the fourth quarter of this year, first quarter of next year. At peak, what is the revenue likely? And with all these backward integrations that you're doing, how much can margins improve?
Almost for the FY22, company has achieved the revenue of the almost 387 crore. For the last quarter, for the June first quarter of the FY23, company has achieved the revenue of the almost 113 crore. For this year, we are expecting almost the growth of the, compared to FY22, we are expecting growth of the almost 20%, FY22. Or going forward, once the capacity will put in the utilization, we are looking forward growth of the almost in FY23, 40% compounded growth for next 2 years, FY24 and FY25.
20% this year, 40% compounded over FY24 and 25. What about the margins? What happens? How do margins improve?
Since company will improve its company is going into backward integration, almost for the total capacity of the 2,800 tons, 40% capacity will be covered under the backward integration. So company will get the advantage of the backward integration also. Or company is going to 8% company is manufacturing up to limited size of the pipe, limited dia size of the pipe. So going forward, we are manufacturing up to 56 dia size of pipe, which very few places in the India do manufacture. So both will improve the company margins.
Okay, all right. Just to try to get a quantitative number, the last year you did margins of close to 12.5%. Now, given that volumes are going to increase, you're talking about some backward integration as well. Where do you see this margin band headed, say by FY25? Can it increase by around a couple of 100 basis points? Is that possible? And the second question that I asked you was on the revenue front. The guidance that you're giving 20% growth in FY23, that is on revenues, right? That's Okay, go ahead, sir. What about the margins? Could you quantify it? Around 15% is something you could do, 14%. How much can it improve, basically?
On blended basis, we can say ki almost from the compared to FY22, on blended basis, almost 400 basis point can be improved in the FY24, or further it will going forward 100 basis point will
We missed
improve
that
in
number.
FY25.
400 basis points is what you're saying. So basically FY24, you're looking at margins at around 16% from 12%.
Yeah.
Okay, all right.
Yes.
So that's a rather large number then, Arun. You're looking at good margin expansion, so that's going to be predominantly because of higher volumes as well as backward integration. We get that. Give us a few more numbers then. What is your current market share in both the divisions, that the stainless steel
Almost
pipe market as well as the welded pipe market? And given that you're expanding capacity, where does this market share go to?
almost on the blended basis. Right now, we have the 5% market share. After this expansion, company is expecting ki almost 12 to 15% will be company market share in SS5 industry.
Okay, and you're looking at 12 to 15% from 5% currently.
Yeah. Right.
And, is the market available to absorb the kind of capacity expansion that you're doing? Can you give us a sense of the macros of the market that you're operating in?
Yeah, in the just for the in SS5 industry, which are in Venus, very few players are in this type of industry in India. Or since the last 2 years, there's a lot of change in the since after the Modi's announcement, Make in India concept, the lot of import has been restricted since last 2 years. So whoever company is manufacturing the SS5 in India, their product is, since import is reduced drastically, so market share of all the domestic company has increased. Or in going forward, import will also reduce since government is planning to put the anti-dumping duty on some of the pipes. So lot of the Indian consumers will require to procure from the Indian players only.
Okay.
So there is a good scope, or there is a good scope of the export also.
Okay.
Seamless pipe in the European market and other markets.
Let's take both those 2 points forward. Then exports are currently 10% of your revenues, right? Given that you're saying there's a good scope of expanding it, where does exports as a percentage of revenues go to in the next few years? Point number one. Point number two, that anti-dumping duty that's been proposed. It's, I think, a very wide range, a few $100 to around $3,500 odd. How much of your product portfolio gets covered by this proposed anti-dumping that is there? So both parts on exports, and how much of your portfolio gets covered? Go ahead.
In anti-dumping criteria, about this total, out of the total capacity, almost 40% products are covered under this criteria. Or going forward, we are focusing the export. Once our backward integration capacity will in operation, we are expecting ki almost our export market will increase up to, we can say up to 100% in FI, from the present 10% to, we are expecting approximately 20% market share in the top line in the next year in FY24.
So FY24 exports become 20% of your top line. At the same time, 40% of your overall capacity is currently protected by these anti-dumping duties. That's correct?
Yes, perfectly correct.
All right. Arun, before we let you go, you're talking about very large numbers and it's sounding extremely positive. But your promoter holding is around 48%. Wouldn't you want, given that things are looking so good, wouldn't you want to get at least to the halfway mark, maybe put it over that 50% odd? Any plans on that front?
Right now, we are focused since there is the right time for the doing expansion. Since there is a very increasing demand in SF industry, that's why we are directing our equity. Or going forward, looking to the scenario and company cash flow, we can think in that matter.
Think of that. I mean, any promoter, if things are going to look so good and numbers are going to go up big time, you'll be happy, right? You'll want to go ahead and increase your holding. So will that be a plan at some point of time?
Sorry, will you repeat the question? Sorry.
Will you look to increase your holding in the company?
Yeah, definitely. Right now, we are not looking forward. Right now, we are focusing on the company front. We want to make the company at the very reasonable level. Once our company cash flow, first we want to make the company cash flow or company business volume. That part will come on later on step. After 2-3 years, we'll think about that.
Okay. All right, take that point. Thanks a lot for joining in and giving us all those details of the company. The street was listening to you. They like the guidance that you've given, which is why we've seen a bit of a smidge on the way up as far as the stock is concerned as well. We'll step into a short break. On the other side, we'll get you more on the markets and individual stocks.